Good afternoon and welcome to today's Charts of the Day video. A couple weeks ago at the beginning of May, we visited cloud computing names, and at the time the CLOU ETF had just launched, so there was really no history that we could look at. And there really still isn't very much history on that one, so we're still going to take a look at the SKYY, which is a little bit, even though it says it's cloud computing, it is a little bit more expansive, and we're going to take a look at some of the key holdings in each one. Sky certainly has some of the big tech names as Google, Microsoft, Amazon, Cisco is some of the top holdings, whereas CLOU is a little bit more focused on some of the newer, more specifically cloud space oriented names. So we'll take a look at both. But in the meantime, we can kind of speculate based on our Cowabunga IPO pattern, with CLOU acting like a new issue, having very little history, coming on the market and starting to trade right around 15. So good chance that gets a large ABC correction, which would be on par with what we see with most new issues, down to about 50% of where it came onto the exchange. And as we look at some of these individual names, we'll see that a large correction with this losing about 50% of the value certainly can fit with what we see in a lot of the individual names. So let's jump over to Sky and take a look at the pattern there. This we pointed out back in May that it had a very, very clear 5 waves up off of the 2016 low. So a wave 1 and a wave 2 into the June post-Brexit low for the wave 2, a long extended 5 waves up for the third, and then the December low counting as that minor degree wave 4, and then a 5th wave up into the May high. Recently broke under the support that it needed to hold for further extension of this 5, and is on its way to confirming a top and the start of a larger correction. And similar to what we were looking at in that CLOU name, we can see a very similar large ABC correction that takes us down a pretty good percentage into this lower support level down here much later into 2020. So from where we are right now, that would be another 36%. So very much in line with the potentials that we see in some of those individual names. What we haven't really discussed is that Sky only started trading back here in 2011. So we have an initial 5 wave up move and a corrective consolidation. And the 5 waves up that we see off of that from our 2016 low that we were looking at on the daily chart a minute ago only got to the 123.6% extension. So that puts this in greater danger of being an A, B, and a C wave up completing, as opposed to being the 1, 2, and this being the top of a third, and it holding as a 4th wave. This might just be the A wave of a larger ABC consolidation. So I'm going to add that here in yellow, and that would be probably at a larger degree by that point, at primary degree, and that would take things further out. This low at the end of, near the end of 2020 that we're projecting would still be a very tradable bottom in a lot of these cloud names, and certainly in this cloud, the Sky ETF. This would be a pretty substantial move up, even though it would ultimately be a corrective rally. But that would just be something that people should be very concerned about, with a lot of those names likely seeing more trouble, even though the rest of the market might be rallying in a larger primary degree wave 5 at that time. Let's go ahead and jump into one of the biggest names, that certainly the largest component of Sky, and one of the largest market caps of some of the tech names that do compete in the cloud space as well, and that's Microsoft. Microsoft started its larger degree low a little bit earlier. Well, it's instead of getting a 1-2 off of the earlier part of 2016. That was a little bit more of a consolidation here for its intermediate degree wave 4, but then completing 5 up, and this is one of the names that we were really pounding the table about because it really looked like 5 waves up that was completing the 5th wave off of the December low instead of starting something new from a larger degree consolidation. So it's starting to drop pretty significantly, is down 6.25% today. Still should be just inside the A wave of the A wave of the A wave of this larger primary degree wave 4. And these targets that we have for this larger primary wave 4 are not arbitrary on our charts. We get to those by a couple of different methods. We're zooming out to a 3-day chart here on Microsoft. We have a larger primary degree wave 1 and wave 2 counted into the 2011 low off of the 2009 low. And then the Fibonacci extensions put us into a very extended top for our primary wave 3. And this target for the primary wave 4 in the 80 region to maybe the mid to low 70s is based off of the Fibonacci retrace of that primary degree wave 3, as well as coming back and testing extension level supports from prior 4th waves and from Fibonacci fan lines. So that gives us a projected further correction in Microsoft in the neighborhood of 40%. And certainly can help get those cloud ETFs down as expected. Moving on to Google. Google's another name that looks like this June low, very similar to Microsoft, was that larger intermediate degree wave 4, and then off of there it has the 1, 2, 3. You can move this 3rd wave inside the parentheses 5. It could even be here, or you can count this as an expanded flat for the 4th wave. And then pushing up into the 5th. It got more of a bounce, more of a pop than we wanted to see on earnings. We were only looking for it to stay under the 1200 level, but looking for a pop up towards 1200 to complete this B wave. It got a little bit more than that, almost getting to a new nominal new high, but has reversed all of that move pretty strongly and does look like this is the start of a larger C wave off of this as a B wave top, and that is targeting under 1,000, probably into the 950 or maybe even lower 900 region at this point. Because this did get so close to a nominal new high as the B wave, it would be possible that this could be all of that primary wave 4, particularly if it can stretch a little bit lower towards the 850 region, which would be a 23.6% retrace of that primary wave 3. Let's move on to Amazon. And we're giving Amazon a little bit of room to hold as a 4th wave, as a small degree 4th, and try and push up for one more high. But again, this counting a larger 1, 2 of an intermediate 4 that started back in 2014. This same December low counts as a smaller degree 4th inside that parentheses 5 of a primary wave 3. Now, I think Amazon is even more bullish long term. So this primary wave 3 and wave 4 is still inside a larger cycle degree wave 3. I think because this is such an extended move, it's very possible that we hold a higher retrace closer to the 700s as only a 23.6% retrace of this entire 3rd wave. And that fits very nicely with the larger degree. We zoom out here, this larger degree cycle degree wave 3. So we have off of the 1997 low, a cycle degree wave 1 and wave 2 into 2001. And then looking for the 4th wave, and then the 5th wave up in that cycle degree wave 3. But again, our targets for this primary degree wave 4 ideally comes down into the 700s, the lower 700s. And if it breaks 1720s, that really starts to confirm a top to that primary degree wave 3. Again, the A wave should be an ABC, and that gives us a pretty big correction similar to what we're expecting in Microsoft and Google overall, but a further 60% nearly in upside, and that's to the more conservative target as far as downside is concerned in Amazon. Now I'm going to go to Cisco. Jump back over here to the primary tab. And Cisco is a little bit different in that it counts inside a larger diagonal at the cycle degree. But again, off of the 2016 low, we have 5 waves up completing the top of a primary move. So that's the intermediate C wave of a larger primary degree A wave. And it's in a similar primary degree correction, targeting down into the 30 region, ideally is where it will hold support. Maybe 28, but ideally into the 30s, inside this larger cycle degree wave 3 that started back here in August of 2011. So this again, this is set up very nicely to probably outperform a lot of what other things that we're seeing in the market that might only get a primary 5th wave. This would get a primary C wave that should be a little bit more proportionate to the entire move up that it got off of 2011 into this more recent high that it is confirming as a major top. So whereas most things will be getting a 5 wave up move as a primary 5th, Cisco should be getting a 5 wave up move as primary wave C, but it still is due for further downside probably after a bounce soon of at least about 40%. Now let's move on to some of the more dedicated cloud computing names and some of those names that are much greater holdings inside the new CLOU ETF. One of those is TWLO. Some of these are a little bit harder to track in terms of what we should be expecting because they have so little history. They're newer issues. This initially got that first move higher and could have been an A, B, and gotten a C wave down of that cowabunga post-IPO pattern, but stretched much higher with most of the other cloud names, getting 5 waves up off of that initial exchange level as support. So we could really move this blue count here as a larger 5 up and can still easily be expecting that larger ABC, which would not take it to a 50%, under 50% of the where it initially started trading, but still a pretty large correction from where it is now, in line with what we expect from most of those other names. So we do have 5 waves up. If this is some larger degree 5th like we have in most of those other larger caps that we were looking at, then this is that same region of support for a larger degree, even larger degree 4th wave. If this is more immediately bullish, then this first A level of support could be a wave. This could be a wave 1 and this could be a wave 2. And so this is maybe a tradable low in TWLO because it could get more than just a B wave here. So that might be a place where one looks for a scalp for a possible 100% rally, even if it ends up being a corrective B wave, and may end up being able to get past that and turn into something much more bullish. Next, we'll look at PLAN, another new issue that has 5 waves up after an initial consolidations from where it came on the exchange. Came on at 21.40. So based on our Cowabunga IPO pattern, we could easily see this coming down towards the 10-11 region as a larger ABC retrace. At the end of the day, even if we don't get this much of a drop for an A wave, we have 5 waves up, so we should see at least an ABC, even if it's more bullish than that, as a wave 1. In a wave 2, the normal support would be in this 35 to 30 region. That could easily be just the A wave of this larger A wave, but people who like the fundamentals and are looking at this as being more bullish might say, all right, you know, that's 5 up and 3 waves down to normal support, and so trade from right here in case it gets past being just a B wave bounce. But again, this is one that stands to lose almost 80% of its current value if the same pattern plays out that we see in most of those other names. COUP is another of the names, Coupa Software. And another one that has an initial consolidation after its IPO. This one really could count as a completed Cowabunga IPO pattern from the initial drop. It started trading on the exchange in the low 40s, dropped all the way down to the low 20s as an ABC correction into the March 2017 low. So that could have completed it, so it may not need as much of a larger degree correction. So instead of getting a big blue ABC that takes it all the way back down here or below, we could get something more like this. So this region might still be the first level of support. We still get an intermediate degree ABC consolidation, but this entire thing might be much more bullish longer term. And this is a primary degree wave 1 off of the low, and it's looking for more of a normal ABC consolidation as a primary degree wave 2 that could take it down to a 618 retrace of that move off the low. And that would set up for something very, very bullish long term, where most of the market would be looking for a primary wave 5 to highs over the levels that they saw in 2018 and 2019, but not substantially more. Whereas Coupa here could be setting up for something much, much more bullish longer term. But again, it likely has to contend with a nearer term drop over the next 18 months or so of about 70%. Just to give you guys an idea of where that would project to longer term, the normal fib extension for a primary degree wave 3 would take that from a projected off a possible 618 retrace, 61.8% Fibonacci retrace down in the high 40s up to a value of 664 for just the normal 1382 extension, and the measured move would take it all the way to 320. So that could be a huge outperformer provided that it holds that corrective support. And once again, as we were looking at on some of these others, an ABC consolidation into late this year or early 2020 is certainly tradable for what is likely to be just a B wave bounce, but a B wave bounce on a lot of these names could easily be a 70% rally. Next, let's look at Shopify. Shopify is another one that could have had that completed CAB PIPO pattern and now has 5 waves up from there. So another one that could be very, very bullish like Coupa long term, but easily set up for starting a larger ABC retrace into the this fib support region. So 5 waves up means that you're due for a correction of some degree. So at the very minimum, this would be looking at being another 4th wave back into the region of this prior 4th. And that's also the minimum retrace region that we would expect for a very shallow wave 2 at that larger degree. So again, an ABC correction down into the 112 region might only be just this A wave, but would certainly set up for a tradable bounce that could be more than just a B wave here. ZS is another much newer issue. This one is was following a pattern much more similar to Beyond, which IPO'd around the same time, getting extension up in what could force itself as 5 waves complete, depending on how you count this consolidation here as a 4th wave, and this was the top of a 3rd, but just actually going off of the low that it made right after the IPO, we only have 3 waves up from there. So this could end up holding support in the mid 50s and allow for one more high before it starts a more significant correction. But if we apply a similar count where it is in many other names, with this being a 3-4 into the December low, and then a fifth wave up off of there, then it can be a much more significant top as well. And that would fit our expectations after an IPO, even though it's several months after, of that large correction taking it well under the spot where it first started trading on the exchange. And the last one that I wanted to look at with you guys today is PAYC. This is another one that really looks strong for a high probability that it's completing the primary degree wave 3. We didn't get a clear fourth wave consolidation in here. So it is certainly possible that you could find support in the 180 to 175 region as an alt of this smaller degree wave 4 and one more push up. But with so many other names really looking like they have started that primary degree 4 again, I would be looking for this to probably fail to hold support in that 180s region down to 175, and it'd probably get a bounce from there as the A wave and the B wave inside that larger A wave. But yet another one where the normal target for a primary wave 4 takes this down another 40 to 50%. All right, we'll end there, and I'll get this posted for you guys, and see you next time.